support, break of support, resistance, 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 and so many other subsequent resistance structures. So we have here a support, break of a support level, retest 1, retest 2, retest 3, break out of a resistance structure. We have here retest candle 2, retest candle 3. A new week will start with a very brilliant and straightforward bias. We like to look at the market from a structural perspective. I want to take note of the key zones in the market where price can return. We don't expect any dumping for gold. Gold is very tangible. It's a top tier asset. It's not like any other thing you can think of. So do not expect gold dumping. So it is important that we follow the price action, we follow the structure, and play along as the big market makers play during the day. So you have the floor for buy, you have the roof for sell. Shabby FS up market strategy focus more on market structure. When we want to buy, we buy at the break of the previous low. When we want to sell, you sell at the break of a previous high. So when you have a high and you have a new high, the new high is a break of structure of the previous high. You have a low and you have a new low. The new low is a break of structure of the previous low. So we have here as SR, we like to minimize it. Then we come here, there's a structure broken. When you even look from the top, look at a support structure. Let's mark it. We have a support structure. Price came back, got support, moved up, it came down, broke the structure. What happened? Retest in 4 hours, RT. Price quickly broke the structure. So we have here a support structure broken, and there is a retest candle, a long wick retest candle. I like to make a zone to this price action. I want to have a zone to accommodate a 4-hour break candle. I like to have a zone on that. So then we have here as RT, ROS, a retest candle and a resistance become support on break of structure. So we have the same thing here, RT, ROS, a retest candle and also resistance becomes support on break of structure. What do we have here? A support structure, a broken support structure, retest 1, retest 2, retest 3, break of the structure in 4 hours. You can see vividly. Close of 4 hours candle above the previous high. Price return because the structure is broken. We have a retest candle here. We have another retest candle here. Another retest candle here. Now as retest candle SR. So we call it RTSR. Very lovely strategy. Very lovely. Developed in-house. It doesn't spy what others are doing. It's based on what the structure of the market says. So we just interpret it. We are not speculating. We are following the structure of the market. So I'm going to take this out. We want to keep as limited lines as possible in order not to fog the mind. The mind is a complex machine. Too many charts fogs the mind and rip you off of a clear directional bias. The fewer lines you have, the better your clarity. So to the upside, we look at a possible structure that have kept us on the sell zone. Like I sell, you sell from the break of the previous high. To the upside, we have a very lovely clean structure, very lovely and clean. If you look critically, you will find it where our market makers have decided to wait for you and I. They are waiting patiently. We have here a support structure, break of a support structure, retest, 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 retest. So we're going to have a zone to this, and you must bear in mind that these zones are in excess of 100 pip. Some of them are in excess of 50 pip. But you must bear in mind that close of 4 hours candle remained on the ascending trend line. I will call it ATL, ascending trend line. We have two ascending trend line. This is another ascending trend line. We need to figure out all our ascending trend line to keep a bullish bias. All we are trying to do is to see if there is any invalidation of strategy or invalidation of structure. Invalidation of our strategy will mean price deviating from trend line. What deviation are we talking about? A breakout from a support structure. We have a support structure to the upside, and that support structure to the upside, we will view it critically to see if there is any invalidation, especially using the body of the candle as litmus test. Ladies and gentlemen, something it's about to happen from the structure of today's market. We are using the body of 4 hours candle as litmus test. If we look at the trend, we want to see if the 4-hour candle in any way escaped from the previous close of other candles. Remember, we are aligning the close of all the candles on ascending manner. This is the close of the candle. This is the close of the candle, the body of the candle, the close of the body of the candle. Price came back here. Then price came again on Thursday within the body too. But on Friday, price seemed to have broken out of the structure. This is what we see from the strategy. This is what we see from the strategy. I don't know if there is any other way we can look at it. And when you look at the structure of the market, we have here SR, we have another SR. So let's pinpoint what the SRs we have and see who is setting us up. The big boys are setting the market up for rip-off. And if you look at the trend, you will see there is a small slight deviation. There is a little deviation. We have here SR1, SR2, SR3, 4-hour close body candle. The body of every 4 hours. We are picking the bottom, open and close. This is the close of the market. This is the bottom. This is the bottom. This is the bottom. Price always bought. Remember, price always bought at the support structure. Price always sell at the resistance structure. When price came here, price sold. We came here, we sold. We came here, we sold. We came here again at the floor, we bought. Price came here at this floor again and bought. But due to the fundamental analysis on Friday, price pulled out, went up, and the candle technically is showing retesting this broken structure. We are yet to confirm if this is true. If this is true, forget about further upswing for yellow metal. If what we see here is confirmed to be true, we will look at it from a lower time frame. So we'll possibly have three charts. This is 4 hours time frame. We'll look at the daily time frame and we'll come to 15-minute time frame to see if we are being misled by market structure. It's a holistic approach. So we need to be well detailed to avoid embarrassment. Yeah, it's an embarrassment to get your analysis wrong. It's a financial embarrassment. So you see here we have support, 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 all in ascending structure. Support, the body of the candle, the body of the candle, the body of the candle. The three supports, no deviation. We have support in 9th of September. We have support at the 11th September. Another structure, 18th September. Then we have a return on 30th September. Price came again on October. We had here October. Then Friday close of the market. Fundamental analysis from the non-farm payroll, economic data, push price to the upside, push price to the downside. And the close of Friday came here as a retest. So I hold this as a retest because analyzing the structure, we have a retest candle coming close. But however, we have a floor impulse, a buying floor impulse, a break of a resistance structure. Resistance 1, resistance 2, resistance 3, break out of resistance structure, become a current support, support 1, support 2. So it will be too fast to move in or dive in for the sell. But however, the structure indicates that price has deviated from the ascending structure. Close of 4 hours candle. From the upside, we have maintained resistance. A break of a structure, resistance 1. I want to label it RS1. This is RS1, RS2, RS3, RS4, RS5. But however, a buying rally demands liquidity sweep. Price never uptrend without sweeping liquidity to the downside. It must pick liquidity from the downside, hit up several stop loss before the buy. Now, a breakout from this structure will give you a confirmed sell. So, because we have from the floor a buying impulse, this buying impulse can technically return price up. You cannot tell. But based on the strategy, we have a retest candle. Close of the market, 4-hour candle was a retest candle. But we are still in a monthly candle. So if you are trading a monthly candle, you cannot use what happened here to make a final trading decision. We have to allow the new week and watch out for price breakout from this structure. A breakout from this structure will give you a sell idea. You now look out for price to come down into 2,600, into 2,000, 9 something. But let us look at another market structure that will support our evidence that price from our last analysis that we could have a cool down in excess of 1,000 pip. Where else can we find a break of structure? We have here another lovely structure, very lovely. When you look at it, it presents itself in a very clear and dynamic manner. The most important thing we are looking out for is not to cut across the body of the candle. We want to see. We have here a support structure, a break of a support structure, retest, price return, retest, break of a resistance structure, current support, break of a support structure, price played around, return again to respect the structure, price left, came back to retest the structure, retested again, came down again, broke the structure. We played low for a while, played low for a while, arrest structure, price came again, retested the structure, broke the structure, came down on retest, expected buy on this zone at 2,600, 2,600 into 2,592 in an extreme case. So if we have a pull out from this zone, expect your buy to be in this zone. Expect your buy to fall inside this zone. When you create this zone, your zone should accommodate at least up to 100 pips. So if you have price falling into 2,600, bear in mind that 2,590 can be an extension. You can further extend yourself up to 15 pip. Yes, up to 150 pip. Yes, you can push because this is good. So this is a very nice floor for price to react. A pull out from this zone. Who potentially see price come to this zone? But we need more confluence from the upside. Do we have a structure that is playing? Yes, we do have a structure. You can see we have a breaker structure from the upside. We have here resistance, 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 break out of a descending resistance trend line on 4 hours. On the breakout, price came back, retested. This is RT. So we are looking at confluence. The more confluence you have, the higher your probability. We have here RT. We have the last RT, which was a double confluence, a descending trend line coinciding with an ascending trend line. I will call this DTL. 4-hour descending trend line. Very clear. Look at it. We have here resistance. Let's get this. Let's get this appropriate. Let's get it appropriate and play. Come on. Let's make a zone. It's not difficult. Forget about those grammars. Those guys are showing you these things are just for formalities. So you see here a resistance structure. I would like to keep the body of the candle as a new roof. This is a new roof. A new roof. A new horizontal. Okay, let's make this smart. New horizontal cell roof. NHSR. New horizontal cell roof. Is 2,673.